we have got to talk about the hottest sector in the commodity market. And no, it's not gold, it's not silver, it's not even uranium. But you've got to see these charts. My name is Daniel Wilhelmi, head of trading here at Bullmarket's Lifestyle. Welcome to Hot Trades of the Day, your daily show for the best swing trading ideas for the coming days and weeks. And let's jump right into it. We are talking, of course, about the grains. I've been telling you about the grains and the coming up movement for weeks. If you went long, you're laughing all the way to the bank. Look at this beautiful uptrend. Look at this beautiful green candle that's developing now after a really strong day yesterday. That's what we want to see follow through on the buy side. It shows a clear change of direction in the market, including with this candle today. If this holds and is confirmed tomorrow, we have broken a major resistance zone that goes all the way back to 2023. This is a big move. And this will trigger a monster buy signal because it concludes the bottoming process of the summer and starts a new uptrend. So, why is this so interesting for us? You have to understand how the institutions play the commodity sector. Yes, you have the specialized mutual funds and the specialized commodity traders, but the majority of the institutional investors, they don't know much about the commodity sectors. They know about oil, they know about some of the big industrial metals like copper, they know about gold because it's basically a currency, and they do know obviously about the currencies and FX. And they're probably, if they're smart, educating themselves on uranium right now. But they don't know about the smaller precious metals. They don't know about the smaller industrial metals. They definitely don't know anything about the ags. So what do they do in this case? They just use trend following models. And that's why you see these long movements. For example, here in wheat, you can see it very well, the long downtrend movement that we saw in the early summer, the long uptrend here in the spring. These are trend following models at work where the people are just using trend following signals. So if we have trend following signals like the one that's about to trigger right now in wheat, what does that mean? It'll attract more institutional buyers. So we're very likely going to go up in wheat and the uptrend will continue. And we see the same, for example, in corn. Look at this. Looks beautiful. I told you we are in a consolidation phase. I told you this about a week ago. Buy the breakout. If you bought the breakout, you're already banking 5% without any leverage on the upside. The easiest 5% you could make in the market in the past days, including stocks, including cryptos. This is a perfect, I drew it down here, ABC movement, A up move, B correction movement, and that is followed by a C up move that we see right now. But we are also seeing that we've hit a major resistance zone. The RSI is getting overbought. We're seeing it right here. We're entering this territory where we went up a little bit more and then we saw a correction phase. I can see that trying to suck in some more people, and then we see a correction phase. I would say first target would be the lower band of this resistance zone. If it would get really low, it would retest the breakout of the consolidation. Not sure if that's going to happen. So if you're long in corn, just move your stop up and stay invested. Let's look at soybeans. That's the lagger of the bunch, but it looks really good. Again, same thing, right? Midterm downtrend broken, new uptrend moving up with new highs. This looks good. If the soybean price can break through this zone right here, then we see a major move up. So This is where the party's at in the commodity sector right now. We definitely have an eye on uranium. I'll talk about it this week. But the grains is where the action is at. And this, higher grain prices, higher ag prices, will obviously have a direct correlation to our short trade on the tier 2 restaurants. So let's take a look at those because there's a lot happening there as well. Let's start with Shake Shack. We are right at a really important zone, as you can see. The uptrend that I drew and that I showed you the last time, the price went down to it and it stopped right there. Now we need to watch if Shake Shack breaks that uptrend. That is our down signal. I personally would assume that we're going to get at least a short-term rebound, but then we can basically draw in a downtrend right here that's developing now, as we can see clearly. So if we get a rebound and it stalls out at the uptrend, then turns down, that's the first negative signal. And then obviously the second signal is the break of the uptrend. Very interesting development. Cava. Oh, this looks juicy on the short side. Look at this. We now here have a clear short-term downtrend that we tested yesterday and rejected. We went down. This is the zone. If we go below 120, it's game over for Cava. We are going down at least to 110 if it wants to close the gap, which I can totally see if we have a correction in the market. 103. Great short. What are we doing now? We're probably gonna jump around this. The longs, the bulls are gonna try to defend this 120 zone. So we have to see, will the price go up to this new short-term downtrend? It probably will. And does it reject it on the 1 hour, even better the 4 hour? Look at it today, the last hour of trading, what's happening there. But this doesn't look good at all, which is exactly what we expected. Wingstop. It rebounded as expected, as I told you. And look at this. It went right up to the new downtrend and stopped. Now we need to see, does it break the downtrend, or does it reverse here and go down? And that's the big bad bearish signal for Wingstop. This is the zone now, 410. If it goes below 410 on a daily close, that stock is finished as well. Sweetgreens. This one is getting worse and worse. Look at this. This looks really good. I told you after it broke the uptrend, this one doesn't look good. And so far we are nice in the money with the short. Nice double top potential here. And look at these wicks in the past 2 days. Great. What does that mean? That means that buyers came in and pushed the price up, but they couldn't hold it. And more sellers came in and just kept selling. So this is really negative. Look where the price closed, right? In the bottom third, both days. This is really negative. Yes, short term, we can go a little higher, rebound. But again, as long as we don't take out this upper end of this resistance zone, this is still bearish. I would prefer if today we only go up to this area, 35.80, around 35.80. And if that's it and we turn down there, that's when I would start adding to the short position or opening up a short position. Doesn't look good at all. And here's another one. Look who's joining the short party. Chipotle. Yesterday, it broke the uptrend, the short-term uptrend. Really surprising weakness. So the resistance zone, it held. And now we see the stock is rolling over. RSI is already turning down. If it goes below 56.50, I would short Chipotle, and the price target would at least be 52.50. So that would be around a nice 5 8% short, 6-7% short. This is not looking good at all. This is what's happening right now. If you're long in the grains, stay long. If you haven't joined the grain party, wait for short-term pullbacks to get in. And the shorts on the tier 2 restaurants, watch what's happening today and tomorrow. We might get significant signals that tell us to add to the shorts, to initiate short positions, or maybe to sell them. Talk to you tomorrow. We'll know more. Have a good day. Bye-bye.